In the intricate tapestry of global economics, Switzerland has long been a symbol of stability, neutrality, and prosperity. Its robust financial sector, high-quality manufacturing, and strategic positioning in Europe have made it a beacon of economic resilience. However, the recent escalation of trade tensions under U.S. President Donald Trump's administration has cast a shadow over this alpine nation. The imposition of sweeping tariffs by the U.S. has sent ripples through the global economy, and Switzerland, despite its traditional stance of neutrality, finds itself navigating these turbulent waters. Switzerland's economic landscape. Switzerland's economy is heavily export-oriented, with the United States standing as one of its most significant trading partners. Approximately 20% of Swiss goods exports are destined for the U.S., surpassing exports to Germany, China, or France. The Swiss export portfolio is diverse, encompassing pharmaceuticals, machinery, chemicals, and luxury goods such as watches. This diversification has traditionally buffered the Swiss economy against sector-specific downturns. The onset of U.S. tariffs. In a move that startled many allies and trading partners, President Trump announced a blanket 10% tariff on all imported goods, with even steeper duties targeting specific sectors like pharmaceuticals and automotives. This aggressive trade policy aims to reduce the U.S. trade deficit and bolster domestic manufacturing. However, the ramifications for countries like Switzerland, which rely heavily on exports to the U.S., are profound. Immediate economic impacts. The announcement of these tariffs prompted the Swiss government to reassess its economic projections. The State Secretariat for Economic Affairs revised its 2025 economic growth forecast down to 1.4% from the previous 1.5%, citing concerns about a potential global trade war. While this adjustment may seem modest, it underscores the vulnerability of Switzerland's export-driven economy to external shocks. The pharmaceutical sector, a cornerstone of Swiss exports, faces significant challenges. The U.S. tariffs specifically target this industry, which could lead to reduced profit margins for Swiss pharmaceutical companies and potentially higher prices for consumers. Given that pharmaceuticals constitute a substantial portion of Switzerland's exports to the U.S., the impact is expected to be considerable. Monetary policy adjustments. In response to these external pressures, the Swiss National Bank, SNB, has taken measures to maintain economic stability.
So today we decided to lower interest rate from 0.5% to 0.25%. And the reason for this interest rate cut is that inflationary pressure in Switzerland is low, and also there are significant downside risks for inflation in Switzerland. And this led to this decision.
On March 20th, 2025, the SNB reduced its key policy interest rate by 25 basis points, bringing it down to 0.25%, its lowest since September 2022. This marks the SNB's fifth consecutive rate cut since March 2024, aimed at countering low inflationary pressures and mitigating the potential negative impacts of global trade tensions. Sector-specific vulnerabilities. The uneven distribution of industries across regions means that the impact of U.S. tariffs will vary within Switzerland. For instance, the pharmaceutical sector is heavily concentrated in certain cantons, making these areas more susceptible to economic downturns resulting from reduced exports. Similarly, regions specializing in machinery and equipment manufacturing may experience stagnation, as investment activity in these sectors is expected to come to a standstill. Global supply chain disruptions. The imposition of tariffs has far-reaching implications beyond direct trade between Switzerland and the U.S. Global supply chains, intricately linked and interdependent, are susceptible to disruptions. Swiss companies that supply components to industries in other countries affected by U.S. tariffs may experience indirect consequences. This interconnectedness amplifies the potential economic impact, making it challenging to fully assess the repercussions. Inflationary pressures and consumer impact. While Switzerland has historically maintained low inflation rates, the current trade tensions introduce new variables. The tariffs could lead to increased costs for imported goods, which may be passed on to consumers. However, the SNB's proactive monetary policy adjustments aim to prevent further declines in inflation, which hit a nearly four-year low of 0.3% in February 2025. Maintaining price stability remains a priority to ensure consumer purchasing power is not eroded. Government and industry response. Recognizing the gravity of the situation, the Swiss government is actively seeking dialogue with the U.S. administration to mitigate potential negative impacts. The State Secretariat for Economic Affairs emphasized Switzerland's commitment to maintaining the best possible market access and is closely monitoring potential U.S. measures. Additionally, Swiss industries are exploring strategies to diversify their markets and reduce dependency on any single country, thereby enhancing economic resilience. Long-term economic projections. Economic forecasts suggest that the tariffs could have lasting effects on Switzerland's economy. According to analyses, the Swiss could face costs of at least 200 Swiss francs per capita per year if the tariffs persist. This projection highlights the potential long-term burden on Swiss citizens and underscores the importance of strategic policy responses to navigate these challenges. International relations and trade alliances. The current trade tensions have prompted Switzerland to re-evaluate its position within the global trade network. The escalating trade war is driving Europe and Switzerland closer to other trading blocs, such as Mercosur, as they seek to offset losses from traditional partners. This realignment could open new markets for Swiss products, but also requires navigating complex political and economic landscapes. Financial markets and safe haven assets. Switzerland's reputation as a financial safe haven has led to increased demand for assets like gold. The Argor-Heraeus refinery in Switzerland is operating around the clock due to a surge in demand for 1 kilogram gold bars in New York. As Switzerland stands at the crossroads of global trade, the nation faces a stark reality. Neutrality is no longer a shield against economic warfare. With Trump's tariffs shaking even the most resilient economies, Switzerland must adapt or risk losing its economic stronghold. Will Swiss industries weather the storm and find new alliances, or will this be the beginning of a long-term financial squeeze? The future is uncertain, but one thing is clear: global trade is changing, and no country, not even Switzerland, is safe. What do you think? Will Switzerland fight back, or will it bend under U.S. pressure? Drop your thoughts in the comments. And if you want to stay ahead of global trade news, don't forget to like, subscribe, and hit the notification bell.